Hello everyone, welcome to The Financial Prophet. I am Viktor Derganov. I'm so glad to see you here, and in today's video we will discuss one of my favorite companies, Tesla. In today's video, we're going to talk about how Elon Musk's interviews in the Oval Office and DOGE have enraged many people and are alienating many potential Tesla buyers. This dynamic could be harmful to Tesla stock, especially in the near term, which is why I wanted to share this update now. However, and this is why this story is so fascinating, there are intermediate and long-term growth drivers to consider. So, despite the probability of more near-term volatility, there's a high probability for Tesla stock to move considerably higher in future years. So, without further ado, let's get into it and discuss Tesla. It's practically impossible to discuss Tesla today and remain completely apolitical. It's impossible to ignore Elon Musk in the Oval Office with the President of the United States, or to ignore the DOGE dynamic and its widespread ramifications. As Tesla shareholders and potential Tesla shareholders, we must be aware that Elon Musk has enraged so many in Washington and across the US. And why stop there? Elon Musk's X platform and the public disputes he has had with European leaders and other global heavyweights have coincided with declining sales for Tesla in various regions. Due to the recent developments and the worsening near-term sentiment surrounding Elon Musk, Tesla, and the company's stock price, I've downgraded Tesla from a strong buy to simply a buy rating. Now, the downgrade is primarily due to a more challenging than anticipated near-term sales environment for Tesla, and due to its high valuation, potentially leading to multiple contraction and more transitory downside in its stock. So my buy-in target is actually $300 or lower from here, ideally in the 280 to the 250 range if the stock makes it down that low. If not, I'm prepared to start adding to Tesla at 300 or marginally lower. Still, despite these near-term difficulties, I remain bullish on Tesla stock in the intermediate and long term. Now, having said that, I do want to mention that personally I believe that there is such a thing as bad publicity. While many say that there is no such thing as bad publicity, the publicity and the fallout from the recent political dynamic may be harmful to Tesla's stock, especially in the near term. Now, in Q4, Tesla sales dropped by about 8% year over year in its most significant market, California. Notably, sales of non-Tesla EVs increased during the same time frame. Now, this phenomenon may illustrate a bias toward Tesla vehicles and possibly, just possibly, due to Elon Musk's and President Trump's connection and the DOGE dynamic. We've seen reports of Tesla owners receiving threats from organized thugs in California, can you believe it? And other areas, threatening to vandalize owners' Tesla vehicles if they don't sell their cars. Therefore, we could see a more significant sales decline in Tesla's vehicles, and not just in the US. Now, I know this must seem really crazy, but it is the world that we live in, where people actually feel that it's normal to go around and terrorize absolutely normal everyday Americans just because they're driving Teslas, presumably because Elon Musk is attempting to stomp out corruption in Washington. Organized thugs are now threatening Tesla owners that they will vandalize their vehicles unless they sell their cars, basically creating a dynamic that could very much put near-term pressure on Tesla's car sales. And it's not just in the US. Now let's take a look at this chart here. Tesla sales fell off a cliff in Europe. January sales posted a 63.4 year-over-year drop in France, a 59.5% year-over-year drop in Germany, as well as considerable drops, 44% in Sweden, 38% in Norway, and about an 8% decline in the UK. So Tesla has an ambitious growth target of about 20 to 30% for 2025. And there are fears that the growth could come in below 20%, in part due to the challenging sales growth in the US, Europe, and other areas. Even Australian Tesla sales were down by 33% year over year in January. Now, let's take a look at Tesla's stock, because it's very interesting. Due to the recent shift to a more negative news flow and other transitory factors, Tesla's stock has declined considerably since its recent all-time high of around $480. Now, we witnessed a 33% decline to $320 from Tesla's recent all-time high. Now, what do I think can happen from here? I believe that in a worst-case scenario, if we see substantial pressure on Tesla's sales, and we continue to see this worsening sentiment and kind of the snowball effect, we could see more downside in Tesla stock, and we could potentially see a drop to the 300 level and possibly lower even to the 280 to the $250 range. Now, this decline could also coincide with the gap fill around the 280 to the $250 zone. So the technicals are kind of pulling Tesla stock towards this level, and if the fundamentals kind of converge in this ultra negative fashion, we could actually see a kind of a flush out at this critical support gap fill level. However, I think it's important to point out that such a deep decline would represent a crash of roughly 42 to 48%. So, I mean, this is almost going to be a 50% decline for Tesla if it occurs. So, I mean, that's very heavy, very significant, and I'm not sure that the stock is going to go down that low. So, while I don't believe that such a drop is a base case scenario, it is possible and investors should be aware of. So, having said all that about the fundamental setup, here's what I plan to do with my Tesla stake. Now, I don't want to sell my Tesla holdings, but I may temporarily decrease the position to avoid the potential drawdown in my portfolio. It's also important to mention that Tesla has been my most significant portfolio holding since around mid last year. Now, people in my investment group are probably going to know this, reiterate it anyways, that I decreased my Tesla position by around 33% from 12,000 shares to about 8,000 shares when the stock was over 400 and around its highs. And I also implemented some covered call hedges to increase income while the stock has been in this downward. Still, Tesla remains a significant position in my portfolio, and I am actually considering decreasing the position by an additional 20 to 25%. And I plan to implement more near-term covered call dividend hedges to protect my current Tesla position. Now, I also plan to increase my long-term Tesla holdings if the stock happens to drop below 300. And if by any chance Tesla stock makes it down into the $200 and $250 support range, I plan to back up the truck at that point. So when we're discussing Tesla, oftentimes we are putting the emphasis on the near term, like for instance, Elon Musk's image problems or the transitory slowdown in growth or the EPS slowdown effect, but many times we fail to look long-term on Tesla. So regardless of what our opinions about Elon Musk may be, we cannot take away from Tesla's remarkable achievements, and we cannot take away from what the company can achieve going forward because it could be very, very, very considerable. For instance, Tesla delivered nearly 1.78 million vehicles last year alone. And despite some early year softness, Tesla could deliver approximately 2 million vehicles this year. Now, this figure would equate to about a 16% year-over-year increase in car sales. And while Tesla sales could decline temporarily, Tesla sales growth could decline temporarily due to the recent political and non-political developments, it's not likely to have a long-term lasting effect on Tesla's long-term growth and profitability metrics. Now, I also want to highlight Tesla's energy generation and storage business and how it's booming and how it grew by 113% year over year in the last quarter, bringing the total 2024 growth rate to 67%. So we actually see the growth in the energy segment reaccelerating. So we could see considerable growth this year. Now, last year, sales were around 10 billion, which is very, very considerable. Now, this year, we could potentially see an increase to 15 billion or more in the energy generation and storage segment. So this could be a $100 billion business already for Tesla. The energy generation and storage business alone could be worth that much. Now, I hear very often that Tesla is a car company and should be valued like a car company, but I don't know any other car companies that have $100 billion energy generation and storage businesses under their hood. Okay, so moving on to our next point here, Tesla's plan to improve and diversify its vehicle lineup includes the introduction of new vehicles later in H1 of this year. Now, this has been confirmed that the highly anticipated mass market Model 2 or Q vehicle, that it may start at only about $30,000, which should open another significant portion of the market for Tesla to operate in. These new vehicles could also contribute to enabling Tesla to hit its 2 million vehicle sales target this year. So it's very interesting to see the new low-cost Tesla vehicles when they roll out this year, what kind of demand they garner, and how exactly these vehicles can contribute to Tesla's top and bottom lines, and also what kind of growth margin we could see on the manufacturing side of these new vehicles, which should be fascinating. Now, there is also the potential FSD rollout for June in Austin, which could serve as the base for Tesla's robotaxi business in future years. In my view, and others have argued, that some regulatory hurdles may be easier to bypass if you are close friends with the US president. Now, some have valued Tesla's robotaxi FSD potential in the trillions of dollars. And due to the future monetization of the autonomous element, Tesla stock could go much higher in the long term. We should also discuss Tesla's AI potential because it gets downplayed a lot. Now, despite this dynamic, Tesla takes its AI program very, very seriously. Tesla's DOGE supercomputer incorporates AI to train, continuously improve, and sustain its massive FSD ecosystem. This phenomenon makes Tesla very unique, placing the company well ahead of its competitors, as it has the potential to provide the so-called entire package in regards to FSD instead of being niche like Waymo or like potentially Uber will be, or potentially many different, the robotaxi segment it's probably going to be massive, and the autonomous driving segment in general should be massive, because we can all see that the future of vehicles and of driving is autonomous EVs. Now, Tesla is right in the center of this autonomous EV revolution, and if you consider Tesla's robotaxi approach and its AI advantage, how it can incorporate and leverage all of these factors to really kind of dominate in this space in the future is really the backbone of why Tesla is valued where it is, and why its valuation can increase much more in future years. But in the end, it may all come down to robots. Actual humanoid robots being a significant part of our daily lives may seem far-fetched now. But you know what? The idea of an iPhone seemed far-fetched in 2005. Tesla is not looking to build around 10,000 of these robots in 2025 just because it has nothing better to do. Tesla aims to build these initial 10,000 robots because it sees a massive market for the Optimus robot as we advance. And I agree, many consumers may be interested in a 20 to 30,000 robot in future years. We should consider that these robots will likely have high-powered AI incorporated in them, which could make them highly capable in not only in simple tasks like walking the dog, mowing your lawn, serving drinks to your family and friends, and potentially even babysitting your kids, but these robots could become much more. They could be like family companions, something between like a babysitter and a pet, a family robot basically that could be a part of many families in the future. I mean, I could see this happening, and Tesla can see this happening, and they're not alone, because Meta Platforms, Apple, and others are currently working on their own versions of the humanoid bot. But Tesla once again appears to be in the driver's seat in this promising futuristic market that could develop into a massive business for Tesla just in several years. Now, some estimates imply that Tesla may sell about 200,000 Tesla robots per year by 2035. This is a Deutsche Bank estimate, but that seems very low in my view. Goldman Sachs has a bit of a more bullish estimate, predicting it could be that the robot business could be a $150 billion business within the next 15 years. However, given the explosive dynamic and the unprecedented nature of this segment, Tesla could achieve this milestone much quicker than Goldman suspects, in my view. So yeah, I just think that in regards to Tesla, we should have a more open-minded approach and a more longer-term view, and we should definitely consider some of these far-fetched ideas, or that may seem far-fetched, like the humanoid robots and the AI-incorporated FSD, as really future products that will most likely come online and could be here much sooner than expected, and could potentially reach higher market penetration and higher sales growth more quicker than anticipated, is basically how I view some of these products, like FSD and like robotics and like AI. We could potentially see the sales and the profits from these businesses sooner than some market participants expect. Okay, so let's discuss this Tesla consumer decline that may actually be temporary, because consumers typically have a relatively short mind span. Now, whether this becomes true with Elon Musk and Tesla remains to be seen, but I suspect that is what the dynamic will be eventually. People will, this whole thing with DOGE, and being close with the president, the noise from this will die down. The mainstream news media will, post other news topics hopefully on a daily basis. So I think that this story will, people will get tired of this story, and pretty soon, maybe in a month or two from now, Tesla could be just another car on the market that, smart consumers are going to buy because it's the best car on the market and not because it's made or not made by Elon Musk. So many consumers and potential Tesla owners may have turned on Elon Musk for now. However, how long will this dynamic last? We've seen transitory sentiment shifts in major companies like Meta and like Microsoft and Google and in many others. And these are typically temporary events that turn into buying opportunities as the sentiment improves after a downward phase. So we're basically in a downward phase now. Exactly when this downward phase will end at 300 or maybe a little bit lower than 300, it's still not clear, but we can be pretty confident that the downward phase will end and then an upward phase will begin. So we may be seeing a similar temporary decline in sentiment towards Tesla products from a portion of its consumer base now. While this dynamic could lead to a transitory decline in car sales, it is unlikely to have a long-lasting effect on Tesla's longer-term growth and bottom-line potential. Therefore, while there may be more near-term volatility, I remain highly constructive on Tesla in the intermediate and long term. So if we look at our table here, these are my projections for future years. Now, due to the potential transitory sales and earnings slowdown, I've decreased some of my near-term sales and EPS estimates. However, despite the possible temporary decline in growth, sales and other growth metrics could reaccelerate in 2026 and 2027. Also, due to Tesla's advantageous intermediate and long-term market position, Tesla could continue generating a relatively high PE ratio in future years. So I have Tesla moving up to about 500 to 550 in 2025, to around 750 in 2026, and the stock could move up to around $1,500 by 2029, 2030, or sooner. So that's my profit report on Tesla, and I have a 500 to 550 one-year price target on the stock. Please comment if you agree or if you disagree with me. In any case, I want to thank you for watching. If you enjoyed my video, please click like, share, and subscribe. You can also follow me, Viktor Derganov, the Financial Prophet, at Seeking Alpha. Thank you very much for watching, and have a wonderful day.